How to control emotions while trading. Mastering the psychology that separates winners from losers. Let me ask you a dangerous question. What if the real reason you're losing money in trading is not the market, not the strategy, not the indicators, but you? What if the greatest enemy sitting in front of your trading screen is actually your own mind? Every day, thousands of traders wake up confident. They study charts. They mark support and resistance. They wait for the perfect setup. But the moment the trade opens, fear enters. They close the trade too early. Then the market runs exactly to their target. The next trade, greed appears. They increase the lot size, and suddenly the market wipes out their entire account. Sound familiar? Here is the painful truth most trading mentors will never tell you. The market doesn't destroy traders. Emotions destroy traders. In this video, I will show you the hidden psychological traps that keep 90% of traders poor, and more importantly, I will show you how to defeat them. By the end of this video, you will understand why traders sabotage their own success, how fear secretly controls your decisions, the discipline system professional traders use, and the mindset that turns average traders into consistent winners. If you are serious about mastering trading, subscribe now, because on this channel we don't just talk about charts, we train the mind of a profitable trader. Now, let's begin. Introduction: The invisible battle in trading. Most traders believe the market is their enemy. They blame the broker, market manipulation, news events, algorithms. But the true enemy is within the trader. The market does not know you exist. It has no emotion. It has no agenda against you. The true battle in trading is between your plan and your emotions. Two traders can use the exact same strategy. One becomes consistently profitable, the other keeps blowing accounts. The difference is psychology. Fear, greed, impatience, revenge, and doubt silently destroy trading accounts every day. Most traders spend years searching for the perfect indicator. Very few spend time building the perfect mindset. Yet the truth is simple. The market rewards discipline and punishes emotion. This book will show you how to master your mind so the market can finally reward your skill. Chapter 1. The emotional trap every trader falls into. Let me begin with a hard truth that many traders never hear until it is too late. Your brain was never designed for trading. Yes, you heard that correctly. The same brain that helps you survive danger, protect your family, and react quickly in emergencies is the exact brain that sabotages you in the financial markets. Because trading requires something extremely unnatural for the human mind. Trading requires you to remain calm when money is at risk, and that is something the human brain hates. Your brain evolved thousands of years ago to protect you from threats like wild animals, famine, and physical danger. When danger appeared, your brain activated the fight or flight response. Your heart rate increased, your senses sharpened, your instincts took over. This response helped our ancestors survive. But in trading, this same response becomes a dangerous enemy, because the brain cannot distinguish between a physical threat and a financial loss. When a trade goes against you, your brain reacts as if you are under attack. Suddenly, your mind starts screaming, "Close the trade, get out now, something is wrong." And before logic has a chance to intervene, you act emotionally. You close the trade. 5 minutes later, the market moves exactly in the direction you predicted. Sound familiar? Almost every trader has experienced this painful moment. You sit there staring at the chart. The trade you exited out of fear hits your exact target, and you feel two powerful emotions at the same time: frustration and regret. But the story does not end there, because trading psychology operates like a cycle, and once the emotional cycle begins, it becomes difficult to stop. Let me tell you a story about a trader named Michael. Michael studied trading for 2 years. He learned support and resistance. He understood market structure. He watched hundreds of hours of trading videos. One day, he finally decided to trade a live account. Everything started well. He spotted a perfect setup. His analysis was clear. The risk was small. He entered the trade confidently. But the moment the market moved slightly against him, fear arrived. His heart began to beat faster. His mind began to panic. What if the trade goes deeper? What if I lose this money? What if my analysis is wrong? So he did what most traders do. He closed the trade. 30 minutes later, the market exploded in the direction of his analysis. The trade would have made him a large profit. Michael felt frustrated, so he waited for another opportunity. Eventually, another trade appeared, but this time he was afraid. He remembered the pain of the previous mistake, so he hesitated. He waited and waited. Then suddenly the market moved rapidly without him. Now a different emotion appeared, fear of missing out. This time he jumped into the trade impulsively, but the market reversed immediately. He lost money. Now anger arrived. Frustration grew stronger, and without thinking clearly, he entered another trade, then another, then another. This is called revenge trading. By the end of the day, Michael had lost half of his account, not because his strategy was bad, but because his emotions took control. This story is not unique. It happens to thousands of traders every single day. In fact, many traders repeat this cycle for years. The emotional trap begins quietly, but once it takes hold, it slowly destroys discipline. And when discipline disappears, the trading account follows. This is why traders instinctively do the exact opposite of what they should do. They avoid taking small losses. They chase profits aggressively. They panic during drawdowns. They hesitate during opportunities. These reactions are not logical. They are biological. Your brain interprets losing money as a threat to survival, so it activates powerful survival instincts, fear, impulsive decisions, irrational behavior. And these instincts create the most common trading mistakes. Traders close winning trades too early. The moment a trade shows profit, fear whispers in their ear, "Take the money before it disappears." So they close the trade quickly. Then the market continues moving strongly in their direction. On the other hand, when a trade begins to lose money, the mind refuses to accept the loss. Instead, it whispers something dangerous. Just give it more time. It will come back. Don't close it yet. So the trader holds the losing trade longer and longer. What began as a small loss slowly becomes a large loss, and sometimes a devastating one. Then there is impulsive trading. This happens when emotions overpower discipline. A trader sees the market moving fast, without analysis, without a setup, without a plan. They enter the trade not because they have an edge, but because they feel an urge. And emotions are terrible trading advisors. If any of these experiences sound familiar to you, listen carefully. You are not alone. Every trader has faced this battle. Every trader, even the professionals you admire, even hedge fund managers, even the most experienced market veterans. The difference is not that professionals have no emotions. The difference is professionals build systems to control emotions. They understand something that amateur traders ignore. The market cannot be controlled, but the trader can control himself. And this realization changes everything. Because once you stop trying to control the market, you begin to control the only thing that truly matters: your decisions, your discipline, your behavior. One of the greatest trading quotes ever spoken captures this idea perfectly. Amateur traders try to predict the market. Professional traders control themselves. Read that again. The goal of trading is not to be right all the time. The goal is to execute consistently. Professional traders know that losses are part of the game. They expect them. They prepare for them. They accept them calmly. But amateur traders fight losses emotionally, and the market punishes emotional traders without mercy. So the question becomes, how do you escape this emotional trap? How do you prevent fear, greed, and impulsiveness from controlling your trade? The answer begins with structure. Before every trading session, professional traders ask themselves three powerful questions. What is my setup today? What exactly must happen before I enter a trade? Is it a breakout? A pullback? A support and resistance reaction? Clarity eliminates impulsive decisions. Second question, what is my risk per trade? Every professional trader defines risk before entering the market, not after, before. Because risk determines survival, and survival determines long-term success. The third question is equally important. What is my exit rule? Where will you take profit? Where will you accept loss? If these decisions are not made before entering the trade, emotions will make them for you, and emotions rarely make good financial decisions. Finally, there is one rule that separates disciplined traders from emotional ones, a rule that protects accounts from unnecessary damage, a rule that forces patience and clarity. That rule is simple: no setup, no trade. Not almost a setup, not maybe a setup, not it looks good. No setup means no trade. Because the moment you break this rule, emotion takes the driver's seat. And when emotions drive your trading, the destination is almost always the same: loss. But when discipline drives your trading, something powerful happens. Your confidence grows. Your decisions become calm. Your consistency improves. And slowly, trade by trade, day by day, you begin transforming from an emotional trader into a professional one. Chapter 3. Greed, the illusion of unlimited profit. If fear is the emotion that makes traders hesitate, then greed is the emotion that makes traders self-destruct. Greed is seductive. It does not shout like fear. It whispers, softly, convincingly, dangerously. It plants ideas in the mind that sound exciting but lead to disaster. Greed whispers dangerous lies to traders. Increase the lot size. This trade will run forever. You can double your account today. Just one more trade. This is your big moment. At first, these thoughts feel empowering. They feel bold. They feel ambitious. But in reality, they are the beginning of reckless trading. Greed is the emotion that convinces traders to abandon discipline. It slowly transforms a careful trader into a gambler, and the market punishes gamblers without mercy. One of the most dangerous consequences of greed is overtrading. Overtrading happens when a trader enters too many trades within a short period of time. Instead of waiting patiently for high-quality setups, the trader begins to force opportunities. They see trades where none exist. They convince themselves that every movement in the market is an opportunity. But trading is not about activity. Trading is about precision. The truth is uncomfortable but powerful. Many traders lose money not because their strategy is bad, but because they trade too often. They take too many trades. They increase lot sizes emotionally. They abandon their plan in pursuit of bigger profits, and slowly their discipline collapses. Let us look at a situation that happens to thousands of traders every day.
Imagine this. A trader begins the day calmly. They take their first trade. It wins. Confidence rises. They take a second trade. Another win. Now excitement begins to grow. The trader feels unstoppable. Their mind starts telling a dangerous story. Today is my day. I understand the market perfectly. I should increase my lot size. This is the moment when greed quietly enters the room. Instead of stopping and protecting the profit, the trader continues. They take a third trade, but this time the trade loses. Now the trader feels pressure. They want to recover quickly, so they take another trade. Another loss. Now frustration appears. The trader becomes emotional, and before they realize it, they have taken 5 or 6 trades in a single session. By the end of the day, the profit from the first 2 trades has disappeared. Sometimes even more money is lost. This painful cycle repeats every day for thousands of traders around the world. The trader walks away from the screen asking the same question: how did I lose everything when I started the day winning? The answer is simple. Greed replaced discipline. Greed convinces traders that trading success comes from big wins. But professional traders understand something very different. Success in trading does not come from one big trade. It comes from hundreds of small, disciplined decisions. Professional traders are not chasing excitement. They are building consistency. They are not obsessed with doubling their account today. They are focused on protecting their capital for tomorrow. Because capital is the trader's lifeline. Once capital disappears, opportunity disappears with it. This is why professional traders think very differently about profits. They do not wake up asking, "How much money can I make today?" Instead, they ask a much more powerful question: "How can I trade well today?" Because when good decisions are repeated consistently, profits eventually follow. One of the greatest lessons in trading can be summarized in this powerful quote: "The goal of trading is not to make money today. The goal is to survive long enough to make money forever." This statement may sound simple, but it contains deep wisdom. The markets will exist tomorrow. They will exist next week. They will exist next year. There will always be new opportunities, but a trader who loses their capital cannot participate in those opportunities. That is why survival is the first priority of every successful trader. And survival requires discipline over greed. One practical way to control greed is by limiting trading activity. Many professional traders follow a strict rule known as the 2-trade discipline rule. The rule is simple but powerful. A trader limits themselves to 2 or 3 trades per session. That's all. This rule forces the trader to become selective. Instead of chasing every movement in the market, the trader waits patiently for the best setups. This creates several powerful benefits. First, it reduces emotional trading. When traders know they have only a few opportunities, they become more careful with their decisions. Second, it prevents revenge trading. After a loss, traders are less likely to immediately jump into another trade. Third, it protects profits. When traders reach their target or complete their allowed trades, they stop trading for the session. This protects them from giving profits back to the market. It may sound simple, but simplicity often carries the greatest power. Many traders destroy their accounts because they believe success requires constant activity. But the opposite is often true. The best traders are not the ones who trade the most, they are the ones who trade the best opportunities. Sometimes the most profitable action in trading is doing nothing, waiting, observing, allowing the market to come to you. Greed pushes traders to chase the market. Discipline teaches traders to let the market come to them. When traders learn this difference, something powerful begins to happen. Their decisions become calmer, their trading becomes more structured, and slowly the dangerous illusion of unlimited profit disappears. Because true trading success is not built on greed, it is built on patience, discipline, and consistency. Chapter 4: The Power of Trading Discipline. Discipline is the bridge between knowledge and profit. Many traders know support and resistance, market structure, price action, but they fail because they do not follow their own rules. A trading plan without discipline is just a wish. Elite traders treat trading like a military operation. They follow strict procedures. They do not improvise emotionally. Professional traders often follow this structure: market analysis, identify setups, wait patiently, execute only when conditions match, accept result without emotion. Consistency in trading comes from consistency in behavior. Create a trading commandment list. Example: I only trade my setup. I never risk more than 2%. I accept losses calmly. I stop trading after 3 losses. Print this and read it before trading.
Chapter 5: Building the Mindset of a Professional Trader. The greatest transformation in trading does not happen on the chart. It happens in the mind. Many traders spend years studying indicators, patterns, strategies, and market theories. They watch countless videos, they buy courses, they test new systems again and again. Yet their results barely change. Why? Because the difference between amateur traders and professional traders is not just knowledge, it is mindset. A trader can have a brilliant strategy and still lose money if their mindset is weak. And another trader can use a simple strategy and become consistently profitable because their mindset is strong. Mindset determines how a trader reacts to winning trades, losing trades, uncertainty, pressure, and temptation. This is where amateurs and professionals begin to separate. Amateur traders think constantly about money. Their mind is filled with thoughts like, how much will I make from this trade? What if I double my account? How fast can I grow my capital? Every trade becomes emotionally charged because money is the main focus. And when money becomes the focus, emotions become powerful. Fear increases, greed increases, pressure increases. But professional traders think very differently. Professional traders focus on process. They do not obsess over the outcome of a single trade. Instead, they focus on executing their system correctly. They ask themselves questions like, did I follow my rules? Did I respect my risk management? Did I take a high-quality setup? This shift in thinking changes everything. Because when the focus moves from money to process, emotional pressure decreases. And when emotional pressure decreases, better decisions follow. Professional traders understand a deep and powerful truth about the market, a truth that many beginners resist for years. You cannot control the market. You cannot control where price moves next. You cannot control news events. You cannot control sudden volatility. You cannot control global economic forces. The market is larger than any individual trader. Trying to control it is like trying to control the weather. But while you cannot control the market, there are 3 things you can control completely: your risk, your discipline, your emotions. These 3 elements form the foundation of professional trading. When risk is controlled, losses remain manageable. When discipline is strong, impulsive decisions disappear. When emotions are managed, clarity replaces chaos.
And when these three elements work together, something powerful begins to happen. Profitability becomes a natural result of consistent behavior. This is why professional traders do not chase certainty. They focus on probabilities. The market operates on probability, not certainty. Even the best trading strategies in the world do not win every time. A strong strategy may win 60 to 70% of the time. This means that out of 10 trades, 3 or 4 trades will still lose. Losses are not signs of failure. They are part of the statistical nature of trading. Professional traders understand this deeply. They do not panic when they lose a trade. They do not question their entire strategy after one loss. They simply move to the next opportunity. But amateur traders often expect perfection. They want every trade to win. So when a loss occurs, emotions explode. Doubt appears, fear returns, and discipline begins to weaken. But the professional trader accepts losses calmly because they understand something powerful. Small losses are simply the cost of doing business in the market. The real danger is not losing trades. The real danger is losing discipline. This idea is captured perfectly in this powerful quote. Your edge in trading is not your strategy. Your edge is your discipline. Many traders search endlessly for the perfect strategy. They jump from one system to another. They change indicators. They chase new techniques. But the most powerful edge in trading is not a secret indicator. It is the ability to follow a plan consistently. Discipline transforms ordinary strategies into profitable systems. Without discipline, even the best strategy will fail. So how do traders develop the mindset of a professional trader? It begins by building strong habits. Habits shape behavior, and behavior shapes results. Professional traders often follow a set of powerful habits that protect them from emotional mistakes. Here are 5 of the most important habits. First, accept losses quickly. The market will sometimes prove your analysis wrong. When that happens, professional traders exit the trade without hesitation. They do not argue with the market. They simply accept the loss and move forward. Second, protect capital. Capital is the trader's most valuable asset. Without capital, there are no opportunities. Professional traders treat their capital like a business owner protects their inventory. They risk small amounts and preserve their ability to trade tomorrow. Third, trade less but trade better. Amateur traders believe more trades means more profits, but professional traders understand that quality matters more than quantity. They wait patiently for the best opportunities. Sometimes the most profitable decision is not trading at all. Fourth, follow your plan strictly. A trading plan exists to guide decisions during emotional moments. When the market becomes unpredictable, the plan becomes the trader's anchor. Professional traders trust their system and follow it faithfully. Fifth, review every trade weekly. Improvement requires reflection. Professional traders study their trades regularly. They analyze mistakes. They identify strengths. They refine their strategy over time. This process creates continuous growth. Over weeks and months, these habits shape a new identity. The trader becomes calmer, more patient, more disciplined, and slowly something powerful begins to happen. Trading stops feeling like a chaotic battle. Instead, it becomes a structured process, a controlled environment where decisions are guided by rules rather than emotions. This is the mindset of a professional trader. It is not built overnight. It is developed through repetition, discipline, and self-awareness. But once this mindset is established, the trader gains something more valuable than any indicator or strategy. They gain control over themselves. And in the world of trading, self-control is the most powerful advantage a trader can possess. Chapter 6. Conclusion. The trader's greatest weapon. Trading is not a battle against the market. It is a battle against fear, greed, impatience, and ego. When these emotions control you, the market will take your money. But when you control them, the market becomes an opportunity. Remember this powerful truth. The market pays disciplined traders and punishes emotional traders. Your strategy may bring you to the market, but your psychology will determine whether you stay profitable. Master your mind, and you will master trading. Don't forget to subscribe now, click that button below, and share this video.